Hi, this is Alan Olson, and welcome to American Dreams. My guest today is Jason Lehtinen. Jason, welcome to today's show.
Thank you, Alan. It's good to be here.
So, Jason, you have a unique background, and I know in your past you've been more operations and behind the scenes. But for the listeners, to get to know you better, can you walk us through your life path? Let's start from school,
Sure.
college, and into where we are today.
Sure. I was born and raised in Minnesota. You'll hear some Minnesota accent that I just can't shake, despite not having lived there in 25 years now. But went to school. Had been greatly influenced younger as a youth around international exchange students, and studied international relations, minored in Finnish, and had studied Spanish as well. And decided I wanted to pursue a career in the military right out of high school, and attended ROTC, finished college, and went on active duty for 6.5 years in the military. My first duty station was here in Kansas, Fort Riley, Kansas, where I served for 3 years as a tanker, driving tanks around the Flint Hills. Concluding those 3 years, I moved on to become an intelligence officer and spent a few years with 10 Special Forces Group out in Fort Carson, Colorado. I was a support guy wearing the red beret, providing the intelligence and doing the reports for the teams that would go on the ground and conduct their missions. After a few years of that, I decided to get out. Had some life changes with my family. I had a 2-year-old son that it was important for me to be around in his life. And so I decided to leave the military. I did not have a plan, but I've always been very entrepreneurial. I've always worked since I was 12 years old, delivering newspapers on my bike, and had decided to pursue an opportunity with General Electric as a black belt, learning Six Sigma, learning process, which of course we learn a lot of in the military. Leveraging the leadership skills I developed in the military, learning process, how businesses work, how businesses make money at GE Capital. Had gotten my MBA in finance while I was there, and it was during my MBA program I decided I wanted to try to get into private equity somehow. Had no idea how to do it later in life, but after 4 years at GE Capital, I got mobilized. Got to go to Iraq on an all-expense paid vacation during the war there from 04-05. So I took a little break from my civilian career at that point. I came back, spent a few more years running a 600-person off-phone call center for GE Capital Consumer Finance. And then it was during those years, the last year and a half especially, where I decided I need to get my career back on track to getting into private equity, where I can get into a kind of a continuous learning environment, learning how businesses work, someday running my own business. And I just so happened to have interviewed for a position with a local boutique consulting firm that needed somebody with Six Sigma background that had just been acquired by a relatively prominent family office here in Kansas City. I was able to jump in and provide internal consulting services on the family's portfolio of legacy businesses that they were transitioning from the restaurant industry into the wealth management industry, and then had made it known with the second generation family leader that I wanted to get into private equity somehow. And my job initially was shutting down businesses, going in, figuring out what was wrong with them, making an assessment to see if we could fix them, if it was worth the money to throw more good money after bad, or are we throwing good money after good, something we could flip. And after shutting down several businesses, selling a couple of them, I transitioned to becoming the private equity point of contact for the wealth management firm that had grown from one office to 15 offices at this time. Today, they're at about 80 offices around the country, and started forming private equity funds, started a couple of businesses up, and then started up a private investment program for all of our wealth clients where deals would come in. I'd evaluate them. I'd do the diligence, do the analysis. If we decided we wanted to offer to our wealth clients, we'd form a private equity fund, raise capital from around the country, from all of our wealth offices, and then I'd oversee the investments, keep the wealth advisors, our clients informed as what was going on with the investments. And that's kind of led me to where I am today, where I'm joined a group called Collaborative Capital, group of 54 high net worth families here in Kansas City. We just opened up a branch in St. Louis with about 30 members, and we're starting a private equity fund for those members so we can co-invest in each other's deals. And we're currently in the process of scaling that fund, scaling the group, and seeing where things go.
Jason, the whole landscape of investing in wealth management has really changed since COVID.
Yeah.
Um, what do you see we're currently going through? Where do you see things heading?
Yeah, I think it's very similar to 08, 09 when I was really young in my private equity career. But things kind of generally locked up back then because of the housing crisis and what that brought to us. I think today we're just dealing with a lot of uncertainty economically, where the people that have the capital that can deploy and invest into a number of different companies are holding on to their cash, being very cautious, waiting for the big recession, the big dip again, to where they can redeploy their capital. And so, with interest rates on the rise, inflation higher than the Fed would like it to be, there's just been a lot of uh, friction and a lot of seizure where companies that they did not raise 2-3 years worth of capital early on in 2020, 2021, they're probably going to struggle. And I think where it's going to take us is it's going to create a lot of great, cheap investing opportunities for people that have the cash. And so I'm looking forward to that.
How is artificial intelligence affecting the new and upcoming companies?
I haven't been exposed a lot to the artificial intelligence, but it seems like everyone's trying to figure out how to utilize it and make it a part of their solution, anticipating that that's where the hockey puck is going, that every company, startups, there's going to be some kind of an expectation that they're utilizing AI somehow. 5, 6, 7 years ago, it seemed like all the companies pivoted from .vc or some domain like that, and they added crypto into the name of their company, or they started incorporating crypto technology. That's kind of come and gone. AI, I think, is going to be here to stay in some way because it's driving productivity, it's driving efficiency. And I don't know, right now where I'm at, I feel like it's really not that different from roboticizing all the automotive manufacturers and driving efficiency without using human labor. AI seems like it's got the ability to impact more white collar labor as opposed to blue collar labor. So that's kind of what we're seeing and what we're hearing coming out of San Francisco right now with all the tech startups laying off people, creating a lot of opportunity for AI to kind of step in and take over a lot of their jobs potentially.
As you're stepping into the new relationship with Collaborative, let's talk a little bit about your model, the vision, and who you're seeking to work with.
Sure. Well, I've partnered with my two partners, Joe and Mark, that started the group about 5, 6 years ago. 5, 6 years ago, it was Mark and Joe trying to find ways to connect early stage companies with people that had the capital to make investments. And they had they held a couple of different events, and they were getting attendees, but they had no way of tracking who was really writing checks and making investments into these companies. And with a couple of members of the group, decided to kind of formalize a collaborative capital idea. And the type of people that we want to bring into the collaborative capital group are individuals that are actively involved in investing, that are seeing deals around the country, not just in one particular region or sub-region in our country, and to bring people in our group that will write checks. We want to network with our members, understand what they're investing in, what they're seeing, what they like, who's going to be going out raising more capital, and those companies that our members have invested in that are raising more capital, the types of deals we're going to be bringing to our group. And so over the course of the 5 or 6 years, the group had seen about 60 different investment opportunities. The members had invested in 28 of them, deploying about $38 million of capital into these companies over their 5 or 6 years. And so I think Mark and Joe did a phenomenal job of really curating the right members into the group. And then the group members brought the right deals to the group. We're investing in very early stage companies, so we haven't had any big exits yet. We've got a few companies that are looking really good, and the group is by nature of who our members are, we tend to be investing in the Series A, pre-seed, seed type deals. And over time, as the group becomes more and more professional and everything's reached a state of maturity, we've got a number of members that haven't been able to write checks, not because they didn't like the deals, but because they just didn't have time to do the follow-up diligence meetings, et cetera. And that's where I created an opportunity for me to step in and partner with Mark and Joe, leveraging this experience I had in the financial services industry, creating a number of one-off and venture capital funds for our wealth clients to form a venture fund for the collaborative capital group. And so that's kind of where the group is going to. We're going to continue to look to bring in high net worth individuals in the Kansas City area that are investing in companies that are willing to share the investments that they're doing with other people, so others can invest in investment opportunities where members have expertise in deals. We've now expanded that into St. Louis, where we've created a collaborative capital group with about 30 family members. And we're currently in discussions with some individuals in Ohio and Minnesota to expand the group beyond the middle part of the country here, getting into other parts of the Midwest. But it's really all about having members that are deploying capital, that are willing to share their capital, their investment opportunities with other people, and really just collaborating. When I worked in a family office, we had expertise in financial services. Now, as a member of Collaborative Capital, the group, I've got expertise in 15, 20 different industries. And, our investment theory working at a family office for a wealth management firm was always we invest with smart money, bring good people to the table, and get, similar risk appetites at the table, making investments in these companies. And that's what we're doing with Collaborative Capital. If a member of ours has expertise in the chemical manufacturing space and he sees a deal that he's putting his capital into, he sponsors the deal, presents it to the group, and other members of the group can make an evaluation on their own as to whether they want to follow that individual into that deal where he's got expertise. So
if a person wants to reach out to you for more information, how would they go ahead about that, Jason?
You can get on our website at ccapfund.com. Our group, which is the fund I'm managing, that website, our group is CCAPKC.org, or just look me up on LinkedIn, Jason Lehtinen. There's only one of me out there.
All right, thanks for being with us today on American Dreams.
All right, thanks, Alan.